Hey everybody, it's Mark Yagi, and this is a big week in a lot of ways. Number one, the market just turned red, so you got to be careful about the market. I'm not here to predict stocks or anything like that. I'm here to kind of tell you to be careful. That's what I'm telling you. This is just an opinion. Here's something that's not opinion. Google is joining the Dow Jones Industrial Average this week. What they're doing, and we're going to be talking about this in just a bit, is they're replacing Verizon. So the Dow promotion is not the problem. The problem is that Google's already having problems. And Alphabet is replacing Verizon. The tape is red, like I just mentioned. And forced index buying does not override a bad market. We are in a market, and I'll show you the candle, I think I'll be able to get to it here. I'll show the candle of like the last hour of the market where it just fell off a cliff. Now, a lot of it's because it's the last Friday in June, and the news had just leaked out that we were bombing the heck out of Iran again, and there's other stuff. But the way the Dow Jones works is it's price weighted. So Verizon is a very cheap stock, and Google is a more expensive stock. So it already has a high weighting. So that's going to be interesting to see how that plays out when it compares to Verizon. Verizon has been very smooth over the last several years, cheap but smooth. So why did the Dow committee do it? Well, like I said, it's a higher price, but it's also a better representation of AI, cloud, digital advertising, and media. The part that nobody really wants to talk about is just because you get added to the Dow Jones, doesn't mean everything is great. In fact, it puts a magnifying glass over you, and bad timing can turn a positive headline into a stress test. So, Google has been good for a lot of the last year, and it's been mixed for some of the more recent part of the year. It's mixed, especially going into red market. The market's red. Index inclusion can create demand. It does not magically fix everything. So you can see Google on Friday here, and today is Sunday night, was down 2%. The QQQ, the NASDAQ itself, was down 1%. The Dow was down 0.33%. And the Dow has been performing the best of a lot of the indexes. QQQs have been horrible. They're below the 50-day moving average. And things are not so good. So the last session range, it closed in the lower half, and that just means the sellers are in charge going into the close. That's not good for a company that wants to go up on Monday. Now, anything could happen. I mean, it's a stock market, so maybe because I think it'll go down, it will go up. But it doesn't really matter what I think, and nobody calls me. So, I'm looking at things going, well, the market's red, and generally when the markets go red, over the next week or two or three, they tend to go down. There's momentum to the downside, according to my market timing system. The problem here is that Google is now getting a loud megaphone. What that means is if it goes down, it's going to be amplified to the downside, according to the news and all that kind of stuff. So they're not going to love that. I got to tell you, I'm a big AI user. I use it in a lot of my businesses. And I think Google's got some amazing products. I think they're kind of stuck behind OpenAI and Claude, even though they have more market share. But they've got some amazing products, and they're not going away. I just don't know how much that spend that they're doing is going to translate to their stock price. So they've lost a couple of really smart guys this last couple of weeks. They've gone actually over to their competitors. They're having some compute strain. They're having to buy some compute from Elon Musk. And, that's not good when you give your competitor money. And then they have a search threat. Like, as you know, like I don't even search stuff on Google anymore. I go to AI. And now, you can search on Google and it'll bring you up an AI answer. But that's going to probably reduce their revenues because people are going to be like, why do I want to be on Google? The story is mixed. I've been saying this for like a year, and part of that year the stock went way up. So, but there is a threat to search right now. Center point here is that Google is not dead. Okay, the Google is fine. They have plenty of revenues. They grow the revenues. Cloud, search, they're still growing. It's just there's a shift going on in the market. You can feel it. I can feel it. AI is happening. Energy is happening. Chips are happening. And Google, has been in charge for 30 years, and they're not so in charge anymore. So how do you trade the headline without worshiping it? Well, the plan is simple. Don't chase things, right? Buy in strength, sell in strength is what I always say. Look for a reclaim of the proper moving averages, and they're not there right now. Google kind of looks a little weak. Define your risk. Use a circuit breaker, stop loss, keep your losses small. All those things that all the great traders do. Do those. Keep it on your watch list. There's no reason to chase it. There's no reason to buy it because it's cheap, because cheap stocks invariably keep getting cheaper. This is not like, the manager's gone insane kind of sale here. The opportunity is in waiting for the other people to overreact, okay? So it's a Dow Jones Industrial Average upgrade, but it's a tactical downgrade. And it's going to get admitted to the old blue chip club. Heck, they've earned it. I mean, they've been around for a long time and have been the center point of a lot of our technical and technological innovations. And we've been living in a Google world for a long time. I don't know if that's going to change. In fact, I doubt it. But there are some things that are a problem for Google, and we'll see how that shakes out. Thank you for joining me. I'll see you on the next video. Take care. The information you just heard is for education and information. This is not financial advice.